So today I'd like to evaluate. This is a what's called a Tucson Pool Corporation. I believe they are the subsidiary of a much larger corporation. I'll explain why some people care about that. And we're just going to look at a couple of things. We're not going to go through an entire operating memorandum. So on this one, and not every operating memorandum is going to have this nice of a layout. There'll be some properties that aren't listed. And so this real estate company's put together a multiple page document. So let's see if most of the information you want to look at should be on 1 or 2 pages. Just for that quick first pass. Oops. We lost it. The nice professional ones look like this. As long as we're on this page. So you see it says the executive summary. It tells you a little bit about the area, what's around it. And it is owned by Superior Pool Products. Or it says Superior Pool Products and National Pool and Tile are subsidiaries of Pool Corp, which is on the New York Stock Exchange. So this tells you about who your tenant is and if they're guaranteeing the lease. It tells you a little bit about Arizona as the most pool service companies per capita in the country. You know, you're trying to get an idea of not just if the numbers work, but is this a sound investment for many years to come? Let's see if we can get into the numbers again. Oh, this is actually pretty important. Strong corporate guarantee. Not all tenants are going to offer a guarantee on their rent. So this says here that the tenant has an annual, it tells you their annual revenue. So this I believe SCP distributors, so Superior Pool Products, their revenues in excess of $6 billion. They're the world's largest wholesaler distributor of swimming pool supplies, equipment, and related leisure products. And we don't need to read all that. Obviously, you can see that they give you quite a bit of information on the parent company who is guaranteeing the lease. So you've got a very strong corporate tenant should you want to make this type of investment with the corporate guarantee. Now, what you're looking for, if it's nicely on one page, is a few different numbers. And you might want to know a lot. You might want to know, well, how this is an old building, newer. This was built in 2007. They're asking just over 4 million, 4.478. The cap rate is a 5.75. That's not horrible. Each market's going to be a little bit different. I've seen better, I've seen worse. And with the rent increases, that actually will increase your cash flow each year. And this is the before tax cash flow. But this is a very good indicator of if your property that you're looking at is priced right, or if there's room to negotiate, or if it's a very stable. It might be a low cap rate, which might not be a tremendous return, but it's very stable. And in this case, you've got a strong corporate tenant. You know, it might not be worth trying to negotiate to get a much higher cap rate because it's a very desirable type of investment and a desirable corporate tenant. So this NN is if there's 3 N's, it's called triple net. And that means if it was a triple net, that you, the owner, the investor, would have no responsibility. So the tax, insurance, and maintenance would all be paid for by the tenant. So unlike apartments where you've got to take care of toilets, trash, and tenants, you don't have that in commercial. You might have some. In this case, they actually spell it out for you. So if you follow my cursor down here, it says landlord is responsible for the roof and the structure. So if there are repairs that need to be made, yes, you'll have to do them. If you inspect the building and find that the roof is in good condition and the structure is, you may not have to worry about that for many years to come. So in this case, this is a double net lease. Now let's see here. Okay, they're telling us that the net operating income is 257,500. And then if they divide that into the purchase price, that's how they came up with the cap rate. There are analytical models that we can run, you can run. That's not going to be all the income that you get because you might likely have a loan on this property. We can get into some other videos where we look at exchanging from one property into the next. You might not take a loan, and so you might be buying a property all cash. In this case, this is or in most cases, you're looking at the net operating income is the gross rent minus the expenses equals the net operating income. And just really quick, I won't get into it on this video. Gross potential rent means there's room to increase the rents. I don't really recommend buying off potential rent. So as I look at this, they're telling you that net operating income is 257,500. It's not. So we'd have to take a real deep dive look at this, which is again why I do these videos. I will help you do that. And we're going to ask these kind of questions. Well, does that mean that they're already set up on the lease? Is this year one rent? We would ask those questions so that before you make that purchase, you're like, okay, we are getting that, or we had to raise the rent, or it's already built into their lease. I think that's probably sufficient just to give you a snapshot of this. We can look at just a couple of things down here. Your rent increases are going to be 3% annual. And I believe they had, let's see, they just renewed. Okay, here it says lease remaining 4.5 years. So every year you're going to get a 3% increase in rent. Now they have a couple of options to renew after that. So it looks like they've got one 5-year option at fair market value. So whatever the lease is in 4.5 years, they can say, yep, we're going to take that. You don't have to negotiate. It's already written in here. Or they can say, no, we found something else. Now, if they've got a really established location and they've got a customer base, I'm going to say the risk is a little bit lower for a company like this, that they can't just be moving around to new locations every 5 years. So you'll have to determine whether you feel safe with 5 years thinking, well, hey, is this company plan to stay here for 20, 30 years? Have they already been here 10 to 20 years? They might be a long-term tenant at that location. And that's why a lot of people like these commercial investing opportunities.